Hello everyone, I am going to explain you about the company accounts, issue of shares, entries on issue of shares. When the company issues shares, first application money will be received. On receipt of application money, bank account debtor to share application account. Then the amount of application money for which shares are allotted, that amount will be transferred to share capital. So share application account debtor to share capital. When the allotment money becomes due or becomes receivable, share allotment account debtor to share capital. When the allotment money received, bank account debtor to share allotment account. And share fiscal amount due, share first call account debtor to share capital. Then share first call amount received, bank account debtor to share first call account. Then share second and final call, if any. If there is second and final call, then share second and final call account debtor to share capital. Then the second and final call amount received, bank account debtor to share second and final call. Shares can be issued at premium. So issue shares at premium. If premium received along with application money, share application account debtor to share capital to securities premium. If premium received along with allotment money, share allotment account debtor to share capital to securities premium. It is to be noted that securities premium is to be adjusted along with the due entry and not with the receipt entry. It may be received along with application, allotment or calls. Anyway, in receipt entry, share premium account will not be credited. Issue of shares at discount. If shares discount allowed along with application money, share application account debtor, share discount account debtor to share capital. If discount allowed along with allotment money, share allotment account debtor, share discount account debtor to share capital. Discount is to be adjusted along with the due entry and not the receipt entry. It may be allowed along with the application, allotment or calls. Issue of shares for consideration other than cash. Issue of shares to promoters for service rendered by them. Incorporation cost or formation expense account debtor to share capital. Issue of shares for purchase of asset. When assets are purchased from vendor, first entry. When assets are purchased from vendor, sundry assets account debtor to vendor's account. When shares are issued to the vendor, vendor's account debtor to share capital. Thank you for your patient hearing. I'll explain about calls in arrear and advance in the next slide.